Oh, hey, didn't see you there. You startled me. Welcome back to Economically Positive with Jon Lau, and today we're going to be talking about
inflation.
If anyone's read the news recently, you'll know inflation is here. It's happening. Just recently, the numbers came out for April, and we've had our highest inflation since 2008. Inflation simply means that our dollars buy less than they used to. It's actually something very normal and that has been around forever, but if it's too high, then it can be a problem. When inflation is high, it means that all of your checking and savings accounts and your wallet, basically all the dollars that you have, are dropping in value. Just take a deep breath because we're going to shed some light on this issue in this video. We'll help answer some questions like, what's causing current inflation? Is it likely to stay high or even go up? How long will it be around? Find out today on Economically Positive. Now I know you're probably hungry for some more economics, or maybe to smash that like button. For the low price of free, you can smash that like button, and I really appreciate it, guys. Seriously, it helps out the channel by recommending the video to more people as the like button gets destroyed. With that, let's go back to talking inflation. In order to understand inflation, we'll be using our trusty supply and demand graph to see how it affects price. If you'd like to see the professor of economics explain supply, demand, price, and inflation using coconuts, go ahead and click on the link in the description below, and I'll see you there. So let's get right into it and see what caused inflation to spike in April. On the demand side, we have the easing of lockdowns and the vaccination rollout. Basically, people feel safe now to actually go out and spend their money like they weren't able to during the pandemic. Number two, on the supply side, is the shortage of production from the pandemic. Number three, hitting both sides, is the giant dump of stimulus money. When Biden had a handful of stacks, better grab an umbrella. He made it rain, made it rain, made it rain all on these hoes. And by that, I mean, of course, the wonderful citizens and corporations of the United States. This is President Fat Joe and Lil Biden. In summary, here are those three things causing the current inflation. So looking at future inflation, I'm going to narrow our focus to the three things that have already affected inflation to help us predict whether it will continue.
Don't just do something because John thinks it's smart. Do your own research, make your own decisions, and go from there.
Using his potion skills that he learned at Hogschmort's Academy of Wizardry, Jon Lau now takes the leaves of luminosity, the flue powder of forecasting, the shrooms of assuredness, the edible of enlightenment. Sadly, Jon Lau also failed out of his potions class.
Kids, don't do potions.
Let's look at number one. What's affecting demand? The ease of lockdowns. The CDC announced that vaccinated people no longer have to wear masks or socially distance, and so we can expect people will feel safer to go out, have social gatherings, and spend the money that they've been saving throughout this pandemic. We saw the beginning of a demand spike in April, and I expect that could probably go up in the next month or two. But once people have spent through all that hard-earned cash, it will probably go back to somewhere around the pre-COVID equilibrium. And that movement is going to help ease some pressure on prices, possibly even help them reduce. Number two, the supply shortage from low production. Factories are opening up, people are going back to work, and production is climbing back to full capacity across all sectors. The one problem here is that it takes time to ramp up full production after being shut down. Laid off workers need to be rehired, and goods still need to be harvested, refined, and shipped. This means that existing inventory could become really scarce before the supply lines have a chance to be refilled. So I expect in the short term, over the next 2 to 6 months, This will actually decrease the supply, further inflating the price, since it's more dependent on current inventory rather than it is on production. This will go away once supply lines are replenished by full production. And remember, with all this cash that people are now wanting to go out and spend, suppliers are racing to be the first to get that cash by being the first back to market with their products. And number 3, the money printing. That puts upward pressure on both the supply and demand, as you remember from the professor. This is going to go back down to normal levels as fewer, if any, stimulus is coming in the future. Now remember, in a normal economy, printing money still is above zero, and so there will still be upward pressure on price due to a small amount of inflation. But again, that's something that we've been used to for a long time.
Quick update. As I was uploading the video in the morning, I saw the announcement for Biden's $6 trillion budget proposal, including new and extended stimulus packages.
President Fat Joe and Lil Biden. Will inflation keep happening at the current rate or possibly even go up over the next few months? Based on what we've talked about, I would say yes. I think that inflation will continue at or above the current rate for the next 2 to 3 months, and then we'll see it start to slide right back down. 6 months from now, I'd be extremely surprised if inflation were anywhere near where it is today, month over month, without an extra huge stimulus package from the government.
Given the new $6 trillion budget announcement, 6 months from now, I would still expect inflation to be down from where it is today, month over month, given what I still believe to be much higher pressures relieved from increased demand and decreased supply. But despite being below current levels, we could probably expect inflation to be above normal levels for the next year or 2, unless the Fed decides to change what it's announced regarding interest rates for the next couple of years. Either way, it's not a crisis. I'll be posting a video pretty soon with 5 tips on how you can protect yourself from inflation. The same tips that would apply during non-inflationary times still apply today on getting the best return for your money, which is to invest on a regular schedule into a diverse portfolio of assets, and you're going to be just fine. And with that, it's time to shift gears from our talk about economics and finance to some positivity time. Choose to live your life as if every single thing about this moment and this circumstance is exactly what you chose. That will give you the freedom to enjoy life as it comes. It will give you the freedom to enjoy wealth and work towards things without the desperation of needing those things in order to be happy, because that desperation just taints those things anyway. So with that, I love you guys. Don't forget to love yourself. Remember, in addition to smashing the like button on this video, don't forget to smash the like button on yourself. And do that every day. It's free. I can't wait to talk to you in the comments below. Despite everything that we've talked about today, there are people who still believe that hyperinflation is a serious problem on the horizon that we're gonna face in the United States. So I'll make sure to drop a video about that in a few days. Smash that like, smash that subscribe button, notification bell. This has been Jon Lau, Economically Positive, over and out.